What's going on, everyone? I hope you're having a fantastic day. So, what I want to be talking to you about today is showcasing you examples as to how the markets can be fractal and therefore can give you multiple entries depending on the market conditions. So, what I want to do today is show you some screenshots that I've taken from yesterday's trades on October 25th to show proof that the market does behave in a fractal manner. And you can also I can also show you a little bit about my entry strategy. So let's get in there and let's get started. So in this example, I already have my higher time frame swing low settled, and so what I like to do is pretty much seek my second form of supporting structure. So that's why we have this intermediate swing low as well. So you can see this orange line represents my intermediate swing low. And so in here, what I want to look for is to price to either dip on discount or at the tailgate of the intermediate swing low. So so that price can produce a fractal entry for me to take it. So in this case, we had a swing high here develop, but look at how much selling occurred, and notice how we're also dipping into this order block right here. In addition to that, we're also gathering some lower time frame imbalance, and as well as going into the edge of this intermediate swing low by collecting a sell side liquidity. And then you'll see here on this 4 minute time frame window that we found ourselves our entries. So not only did it happen once, but it happened twice as well. And you'll see what I mean. So when price finished its higher time frame swing high, you'll notice that over here, if we go into this next window on the 1 minute, you'll see that price created a swing high here. You'll see the three pattern again, 1, 2, 3, and then it got broken through by this candle right here. So all this was my short-term swing high, and I would like for price to break out of this, right? Giving us a fair value gap at the discount so that we can take it. But I don't want to focus on this just yet. I'm going to focus in an even shorter time frame. So we're talking 10 seconds. So if we go over to this next window, you'll see that we had the three-bar pattern again, created this short-term swing high. Then price gets the institutional sponsorship via this break of structure, right? And now I want to find what was the structure that caused that breakup structure. And you'll see that once again, here we go, three-bar pattern again. 1, 2, 3 got broken out of it by this body, and we had that big push up. And now look at what we need to do. We need to get this range up and going. And what do we know about premium discount? We know that premium's up here, discount is not here. If we're trying to buy, right? Because remember, we're working with the context of getting into the edge of our intermediate swing low, and as well as we are already collecting, we are deep inside of an order block, and then we're also collecting liquidity in the form of sell stops. So once we're here, we're just looking to find our fractal, our little fractal, because this happens over again in higher time frame ranges, like even in the hours or the dailies. This happens. It's just that we're just so deep in the woods, like we're so fine tuning it to the 10 seconds. I'm showing you that this stuff actually works. So you got here, what do we got? Fair value imbalance, aka a fair value gap, right here, and it's a legit one because we broke this one high with this institutional sponsorship. So you get the range of that, go into discount, right? Because we want to buy cheap. You set your stop loss to either to the edge of the swing low or up to the entirety of the swing low here. And then what do? You just play it out. You play the idea. Price dips down here and then makes that boost up, continuing higher prices. And then if we go back to this 1 minute range, this entry is being represented by this entry. So you'll see that price does this move and it reaches back up to premium levels, because again, we're working in the range of this intermediate swing low. If you need a refresher, our intermediate swing low was this white box right here. So here we have our discount and here we have our premium. Once we reach the edge of it, you'll see that price was taken up from the edge here of this intermediate swing low all the way up back to premium. And look at what just happened. And they took it just enough before they sold it back down again. So if you want to study this further, the 10-second entry that we just took, you'll see that we had this swing high that was being developed. And remember all that selling pressure? This is what it looks like in the 10 seconds time frame. So once we reach down to the fair value gap, this was an imbalance, right here you see that imbalance right here. So we'll take that, we'll take the buy side liquidity, which is the edge of this intermediate swing low. So notice, and we're also inside this higher time frame order block. You'll see that a lot of things are coming together, so we have a lot of reason why we should go up. And then look, have a swing high, breakout structure. What are these two bars? These two bars are our order block. Great. Now we look for our fair value gap, or little mini imbalance right here, right? That's on discount. Combined with an order block, inside a higher time frame order block with imbalance and sell side liquidity, and we're at the end of a swing high. Like this is, remember what they say about the end of a swing high. We are in a short-term discount. So when you're in a short-term discount, you want to buy, right? So this is our reason that gives us the reason to go buy. And this is happening in the 10-second, folks. So price dips into it, takes it up to premium prices. It held up to here. But the reason why I cut it off here was because this is a 3-hour trade. That's all I look for, 3-hour trades. But the more I'm learning about this, the more I'm getting more confident that price will behave in this manner. Okay, so now back to our old topic about that second fractal that occurred, right? Because once we got into this 10-second entry, you'll see that price was taken up to premium levels, right? And then taken back down. But why did that happen? Once price had reached that premium level, in a higher time frame perspective, if we look at the 4-minute, you'll see that when price was taken up to premium levels, price had to come back down, because guess what? This was structure used in sponsorship to take over the swing high. You'll see the 3-bar pattern again, 1, 2, 3. And how do we know it's a swing high? That's to confirm it. Well, this candle right here, its body, if you compare the levels, this body's opened lower than when it closed. So that's just my little confirmation trick that this is a confirmed swing high. So once we broke out of it, this was a move in itself. So I highlighted it here. You'll see. I saw that this range, which is also a 3-bar pattern sponsored, was the reason why it was due for higher prices. So again, what do we see here? A fair value gap with imbalance, right? We were taught in the 2022 mentorship that when price breaks off the swing high, short-term swing high, short-term swing low, we seek our fair value gap entry. So we have it here, right? But it's not just any kind of imbalance. It's actually a mitigation block. So what I tend to do here is that, because we're in the seconds and we have to consider volatility and the risk, I tend to get into the fair value gap here and then have my stop loss be set to either the edge of the entirety of this range. And as you'll see here, that in this higher time frame, you see, even if we had set our stop loss down to the swing low, price dips into this fair value gap and then eventually ends up taking it up to the premium levels, up to even the buy side liquidity of this entirety of this intermediate swing low. So that proves it. I hope this proves it's an example that price does move in a fractal manner, and depending on the market conditions, it can give you 2 plays in one range. And this is something that I've been witnessing more frequently, as well as because I'm understanding more about my entries and such. So when I see moves like this, it just reminds me that whether you miss a move, there's always going to be another opportunity to get in. And there's nothing to worry about. If you didn't catch a move today, don't worry about it. Just keep in mind that price is always fractal, and things will repeat itself again. One last example I have for you in terms of how price is fractal is the following. So we'll see here, again, we have a higher time frame swing low here provided by the 10-minute time frame. You'll see that the outcome was that price wanted to keep going for higher prices. You see I have my order set up here. So this was an entry that I missed today, the 26th, and the reason why I didn't take it was because it happened in the 1 second. Believe me or not, yeah, you just have to develop an eye to start seeing these things. So again, I have my intermediate swing low here as well, and I just want an incentive for price to act in a way so that I can enter it on a discount level or at the edge of this intermediate swing low. This is a much better view. On the 1 minute, here we go. Swing high, 1, 2, 3, 4, and just kept going down lower. And remember again, once we are completing a swing high structure, we are in a short-term discount. So if we are in a short-term discount, I want that discount to be in confluence with a higher time frame, outlooks that supports the idea that we should be looking for buys. So again, we're inside this order block right here, and on top of that, we're also tapping into the buy side liquidity of this intermediate swing low. So what do we do here? We seek our entry, and look at that. I was looking into the 5 seconds. I had seen my pattern right here, 1, 2, 3, broken out of here, swing high. Now I would have liked for price to have broken out of this much more clearly, but as you can see, not even the 5 seconds was able to provide me a very legible entry that I could take. I had it here. I was looking for my entry, but I couldn't find it. It wasn't until after that I reviewed my trade that I realized, holy smokes, this happened in 1 second even. So you'll see again, we had my swing high here, but not only that, we also had this relative equal highs. Remember that in the 2022 mentorship after the break of short-term equal highs or equal lows, look for that fair value gap. And in this case, what broke the relative equal highs? Well, this range. You'll see that this in the 5 seconds, it looks really choppy, but the idea is still there that once we broke out of it with an institutional sponsorship, we get the range of that. So we have our premium discount. We want to enter cheaply. So look for our imbalance. And you see it right here between this little gap. That's our fair value gap. And then look what price ends up doing. After we break the relative equal highs, price wants to look for that mitigation block. This is not just an imbalance. It's the mitigation block as well. So that's where I would set my entry if I had seen it. And then I would have set my stop loss to the edge of this entire swing low right here. And look what ended up happening. Price dips into it, rebalances it, and then it starts going up for higher prices. This trade could have been a good trade for the day. Not only did it reach my profit target, but it also reached the edge of this intermediate swing low. And if we go back to our higher time frame perspective, you'll see that this kind of price action created this kind of candle. Once again, I hope this video serves its purpose to showcase to you that yes, price moves in a fractal manner. Whatever you see in the higher time frame perspective, whether it be in the weeks, daily, minutes, it can occur again as well in the seconds. So that's something to look forward to and to be optimistic about, because this serves as an opportunity for all us traders, right? Whether you're a scalper, day trader, swing trader, long-term position trader, like you're gonna have opportunities that present themselves in many different time frames. It's just a matter of selecting what kind of time frame are you most comfortable with. Like as I said, I love entering in the seconds trade, but when things like this happen where I just can't see it, because going into the 1 seconds is not something that I will look forward to. But if you are someone that wants to develop an eye for that, it's totally possible. And you just saw it, that price behaves in a fractal manner, and you can even have participated in the markets within the 1 second time frame. So yeah, again, hope you enjoyed this video, and yeah, hope you give it a like. So yeah, I'll see you in the next one.